We will be taking that up with our guest Peter Cardillo of Spartan Capital joining us today on ET Now. Peter, appreciate you taking your time out and speaking with us today. Let me first begin by asking you on the big concern that's of course emanating globally. The world is facing an energy crisis. Is the supply of natural gas, crude oil and other energy sources, coal also, failing to adequately satisfy the demand. For how long do you see this crisis playing out and the larger impact it could have on various global equity markets as well?
I think it's going to be I think it could be lasting for at least several months, and this means that we could see higher in gas prices. And obviously, the big fear is will it contribute to inflation? That is, to further inflation. And there's no question that we're going to see higher rates of inflation emerge from these higher prices, both in crude oil and in natural gas. And so basically, this, is probably going to push the Feds in changing monetary policy sooner than expected. And I think that's what we're seeing, the real fear that's in the marketplace right now. And of course, yields moving back up towards the higher end of the trading range here, and that just simply indicates that we're going to see higher yields. Now, will higher yields impact the equity markets impact the equity markets to the point where earnings are going to take a back seat? I don't think so. Even if we were to get to, let's say, 1.75 or 1.85 on the 10-year note, it's still relatively a very low level. And so there'll be times, obviously, like today, when the higher yields depress equities. But I think it's just temporary, and I think that the earnings season is going to be respectable, and that's going to lift equities.
As we're seeing, stocks today come under pressure, Peter, I want to understand from you, the 10-year treasury yields, of course, once again spiking. Could this lead to a rotation out of some of the technology names that we had seen?
Well, we've been seeing that, but if you look right now, some of the technology stocks seem to be moving higher, and so it looks as though, at least for today, we're not seeing a massive sell-off in that sector. And that indicates that at one point or another, maybe unless we get yields moving up rapidly, that maybe the market as a whole will be able to cope with the higher yields. Now, obviously, if you were to have a major spike in 1 or 2 days, that would be detrimental to the market. But if you have it in small increments, or in increments that would be considered manageable for the stock market, I think we can brush it off.
Having said that, Peter, we're seeing oil also coming in at multi-year highs, with the OPEC Plus, of course, restraining their supply amidst a global energy crunch as well. Would you say this is going to be a tough winter ahead for a lot of countries, especially the emerging markets? Because if oil prices were to go up and other commodity prices, for example, coal and other energy supplies were to, and the prices were to go up, this is going to be a tough time ahead for various emerging markets like India.
I think for the next 2 to 3 months we can see higher energy prices, and I have a target of 81, 82 on WTI here in New York, which would put Brent close to maybe 85 or 86. And there is talk in the marketplace that perhaps we're seeing 95 or $100. I'm not too sure about that, unless the gas crisis in Europe and in China continues to worsen. But if you look at um, the oil inventories that were just released a few minutes ago, we saw a hike of a little over 2.34 million barrels in crude and gasoline, a little bit over 3.2 million, and distillers actually went down a bit. So basically, the retreat that you're seeing in oil prices this morning, I don't think is really attributed to the weekly inventory data, but just from some profit taking after the market rose substantially over the past 4 or 5 days. So I think we're far from over in terms of rising prices. Again, 80, $82 is perhaps just around the corner, and we could spike up a little bit more from those levels. But I doubt very much we're looking at 100
Okay.
plus oil.